Good afternoon, everyone. Thank you so much for joining us today for our webinar on turning diverse prospects into successful applicants. This is the first in a webinar series that we're really excited about that is going to be focusing on the things that we can do together as a community to advance collective commitments and interest in recruiting, supporting, and advancing more owners and franchisees and from diverse and underrepresented communities through the power that is in franchising. So we're so excited to have you join us here today. Let me introduce myself for those of you I haven't yet met. My name is Ricky Amos. I am the Executive Director of the IFA Foundation. My responsibility as part of the IFA Foundation, our mission is to raise awareness of the franchise business model and help educate all stakeholders and the public about the good that is franchising and how it is elevating and supporting communities across the country and around the world. We focus on 4 areas at the IFA Foundation in particular. We focus on veterans, we focus on community and philanthropy, because we know in both cases, veterans are good for franchising. Franchising is good for veterans. We know just how philanthropic and how community focused our franchisees and franchisors are, and we think that is an incredibly important story to tell to help people understand the benefits of franchising. We focus on research and data because we also know that we want people to understand in real numbers, as well as through the stories we tell, how powerful franchising is. And the last one that I want to share, which is I think particularly relevant to our conversation today, is our commitment to raising awareness and information and educating individuals related to diversity in franchising. Within the foundation, we have our Diversity Institute. And the Diversity Institute is really focused on connecting opportunity seekers and reaching out to those who can and should be interested in entrepreneurship, small business ownership, and introducing them to the franchise business model. And then also working with our members within IFA and those who are in franchising who are interested in connecting with the communities. So we're trying to bring everybody together through education, outreach, and information share to help advance these mutual interests together through the powerful system that is franchising. We do that in a number of ways. We partner with local and national nonprofits who support and engage future entrepreneurs who are trying to support them and educate them as well. We get information back from them to help improve our business systems and the like. And then we also do our own kind of networking and community building through our affinity groups. So if you haven't heard of them yet, we have multiple. We have our Black Franchise Leadership Council, our Pride Council for the LGBTQ community, as well as our most recently launched Hispanic Latino Franchise Leadership Council. These entities are really driven to support networking, idea sharing, engagement and support, and then outreach and education to all of the stakeholders, again, to solve these challenges and opportunities and helping connect people to the power of franchising. All of you who are on this call as our members, these affinity groups are open. We encourage everybody to sign up and get involved with us to help advance our mission and work together on that. We can share more about that at the end of the webinar. And I think the other piece I want to share, since many of you I know are IFA members, is a big thing that we're focused on at the IFA right now is telling the story about how franchising is open for opportunity, that it is creating multi-generational wealth creation opportunities for first-time entrepreneurs, often veterans, women, minorities, communities of color, you name it. And we are wanting to elevate that story and help people connect to that information. So how is that leading us to what we're talking about today? And I mentioned that a little bit at the top of the call. So this webinar is the first in our series of what we consider critical conversations that we want to have within the IFA membership. Probably one of the most common questions we get at the Diversity Institute is, we as a brand want to increase our representation of minority owners, and we want to see more communities of color, more from the LGBTQ community be owners, and we want to connect with them. So how do we do that? And how can we increase representation within our ownership ranks? And one of the things that we feel is important for us to do is have conversations with our member community about what are some of the unique challenges challenges that impact these communities to then move from being an interested owner to actually being a successful applicant. One of the most common challenges we all hear about and know about is the access to capital challenge in terms of, finding and becoming able and ready to be funded and supported, connecting to the institutions themselves. If you aren't necessarily immediately ready out of the gate to be funded by one of the bigger banks, what are your options and what does that look like? So we wanted to start with that conversation and have just an amazing panel that we're going to share with you today. And I can't wait for you to meet them to talk particularly about the role of community development financial institutions, CDFIs, and the role that they were specifically created to serve, which is to provide financial services to make them more accessible and affordable for underserved communities. And so we wanted to raise awareness of them as a resource, talk about how those could be of use and value to your brands and to your applicants, and connect those to you. Before I turn it over to our amazing moderator, I'm going to give you a couple of logistical announcements as well. So how to help everybody take advantage of our webinar today. The webinar is being recorded. We will distribute it to everybody for your reference after the event, and we are going to post it because our goal is to help get this information in front of more and more of our members to talk about that. So we're going to encourage you to share it with others. We're going to take all of your questions via the chat box. I'm sure everybody is very familiar with the chat function in Zoom at this particular time. So, and we'll also make sure we have ample time at the end if there are additional questions that we want to be able to host. So please keep those going. We'll keep an eye on them throughout the event, as well as save time at the back end. So with that, I'd like to introduce everybody to our moderator. We have Jack Wilson. He is currently a principal of Liquid Capital of Greater Philadelphia. He has previously been a chief development officer at Family Financial Centers. He's a franchise subject matter expert and a SCORE mentor in the Philadelphia area. And he is also the chair of our Access to Capital Committee as part of the Black Franchise Leadership Council. We are so appreciative of you joining us here today, Jack, and helping to lead this conversation. And with that, I will turn it over to you.
Thank you very much, Ricky. And you said it better than I, so we don't need to talk about me. But welcome to all those in the audience who are franchisors, development executives, and others. We think today, the time that you spend today is going to be very well spent. We're excited about our topic as well as our two speakers. And remember, our topic is turning diverse prospects into successful applicants. The content is focused on tools and resources to help overcome one of the most common hurdles your prospects have. As Ricky mentioned, it's access to capital. What we're going to do is I'm going to introduce, and first I'll give a brief bio of our two speakers here. The first is Dafina Williams. She is Senior Vice President of External Affairs at Opportunity Finance Network. You may hear it referred to the acronym OFN. It's a national network of community development financial institutions, CDFIs. She leads the organization's legislative and regulatory public policy efforts with a focus on federal appropriations lobbying, small business lending, and affordable housing. Dafina is vice chair of the Responsible Business Lending Coalition. That's an association of nonprofit and for-profit organizations that promotes responsible small business lending practices. She also serves on the New Markets Tax Credit Advisory Board for Self-Help Venture Funds, on the National Alliance of Community Economic Development Associations, Community Development Council, and on the Community Development Advisory Board of the American FinTech Council. And Dafina is magna cum laude graduate of Temple University, my alma mater here in Philadelphia, where she received her BBA in economics. We're looking forward to hearing from you shortly, Dafina. Before that, we'll introduce our other speaker, and that's Anthony D. Williams. Anthony is the market president at AltCap, and he's also the managing director for Equity Square. Now, Anthony's background is a business and economic development executive, and he has substantial experience providing tactical and strategic guidance to Fortune 500 companies, as well as small and mid-sized businesses in various industries like healthcare, manufacturing, consumer products, utilities, sports technology. Now, prior to being with AllCap, Anthony was the former president and CEO of the Regional National Minority Supplier Development Council. And in that role, he served as a catalyst for minority business development, corporate supplier diversity partnership, and community collaboration for economic development. His organization processed 80 plus corporate members and certified over 400 MBEs, minority business enterprises, annually throughout Missouri and Kansas City region that employed 34,000 employees and generated more than $10 billion in annual revenue. As a community leader for over a decade, he's demonstrated an unwavering passion for education, entrepreneurship, and economic development, particularly in urban communities. So you see why we're so excited to have these two speakers. So what's going to happen is Dafina is going to present first, then she's going to turn it over to Anthony. And after that, we're going to have an opportunity for Q&A. But if you feel like it, you can put your questions in the chat box. Let's turn it over to Dafina Williams now.
Thank you so much, Jack. And I'm so excited to be here, not just presenting with a fellow Philadelphian, but to talk about one of my favorite topics, which is CDFIs. So I am going to ask my colleague to share his screen to run through the slides, just so I can focus on the presentation. Oh, actually, I will share my screen instead. 1 second. And let me know if you can see this. Can you all see that?
Yes, Dafina.
Great. Okay. So I am going to today talk about what CDFIs are and help talk through how they're funded and how they can be helpful potentially to some of your businesses. So this is just an intro to CDFIs, and this is a great picture of one of the businesses funded by a CDFI in their network. So CDFIs are private mission-driven financial institutions that are certified by the Department of Treasury's CDFI Fund. So it's actually a dedicated federal agency that is responsible for certifying and providing grant and other support to CDFIs. So right now there are about 1,400 that are certified. Awesome, thank you. So right now there are about 1,400 that are certified CDFIs. And you can see here about a third of them are actually credit unions, community development credit unions. About 25% are community development banks, and then we have a handful of venture capital funds, and about 42% are going to be organized as loan funds, and I'll explain a little bit more about what loan funds are in a second. So if you're familiar with tech billionaire Robert Smith, he likes to say that CDFIs are the capillaries of the banking system. So if you think about mainstream banks and credit unions as kind of the main way that capital flows, then CDFIs are the capillaries, smaller, but just as important to make sure that financing reaches the places that it's needed most. Next slide, please. So what is it that CDFIs actually do? Well, they're specialized lenders who actually know how to reach deep into underserved markets. So we really are here to help fill those credit gaps. CDFIs provide access to affordable, responsible capital that's really designed to help move businesses, consumers, and communities into the financial mainstream by investing in the capacity of these people, these places, and the institutions that either other lenders overlook or these communities are actually sometimes targeted by high-cost predatory lenders. So CDFIs actually invest in numerous sectors, everything from affordable housing to small business to community facilities like childcare and health centers, and even in some infrastructure. So really anywhere where there's a community need, there's probably a CDFI out there that's trying to figure out how to solve that problem. Next slide, please. So I just wanted to tell a little bit of the impact of the industry and help you get a sense of, kind of the scale and the history. So the industry really was born out of the civil rights movement in the 60s and 70s. And, they actually, the first CDFIs were kind of formed in some church basements in the South where, leaders really saw that there was a need to help people in their communities get access to financial services and products where, there was redlining or, not a lot of access to credit and capital in their community. So they thought, how can we pool our resources together and actually build institutions that are really focused on filling those credit gaps. So some of the earliest investors in CDFIs were actually nuns investing their pension funds. And from those experiences is really where the CDFI industry's responsible, affordable capital mantra came from. There's a little joke in the industry, which is like, you don't lose the nuns' money. And so our industry has really grown and changed and really adapted to new needs in its history. It's actually about 222 billion in current assets right now. And I'm positive that that's an undercount because that number is from fiscal year 2020. And there's been significant new capital and investment coming into the industry since then. The other thing about CDFIs is that we really reflect and understand the communities that we're in. We tailor our services to the people and places in which we are working. Next slide, please. So I want to talk a little bit about OFN, the entity that I actually work for. It's actually kind of difficult to find this level of impact data for the entire CDFI industry, but in our organization, we represent about 370 CDFIs, and we actually do have some pretty good data on, how well are we actually reaching these underserved markets. So as you can see, our customers are, 60% people of color, 84% low income, 27% rural, and 50% women. And so we really have, proven our case that we actually know how to successfully reach those communities. And actually, the numbers of people of color have been going up in recent years. Our members have about $27.5 billion in assets, and they have financed more than 300,000 businesses, 2 million housing units, and helped create or retain more than 2 million jobs. And all of this is done prudent and responsibly. CDFIs actually have charge-offs that are less than or on par with FDIC insured institutions. So we know how to manage the risk, manage our capital, and make responsible loans and investments into communities and get paid back. So we're really focused on making sure that we're helping our borrowers to become successful. Next slide, please. So what makes this model different? I think there's a couple of things. One is something I've hit on a little bit already, is that CDFIs are really focused on this idea of community impact as opposed to just profit making. Our focus is on right sizing the products and resources for our communities as opposed to doing what we can to generate the highest returns. I think CDFIs recognize that there are so many barriers that are holding back women-owned businesses and people of color throughout the various stages of business, from startup and all the way into those growth stages. And so we try to remedy those by combining capital with coaching and training. We also really focus in on the parts of the market that are overlooked or avoided altogether. So these are businesses that maybe they don't have perfect credit histories, or they don't have a lot of equity, or they don't have a lot of revenue, or they're just getting started and the owners might need a little bit more training and technical assistance. That's really our sweet spot. And the goal here is to, in theory, kind of work ourselves out of a job, right? We want to actually help our businesses grow, get stable, get strong, and then ideally move them along to mainstream finance and mainstream banks. And then that then opens up opportunities for us to help a new set of businesses that might need a little bit more support and growth. So it's kind of along a continuum, and we're making sure that you're helping these businesses get to that next stage. And we do that by providing not just capital, but also development services like training, technical assistance, and coaching, or what we like to call the Capital Plus model. We don't just use an algorithm or look at your financials and then give a yes or no and throw money at you and walk away and wait for the payments to come in every month. This is a relationship between the lenders and the borrowers. It's more aligned with that kind of old school community banking model. And so we work with businesses to help them thrive. And I think that's really key to those low charge-off rates I just mentioned. CDFIs have the ability to underwrite loans with more flexibility than mainstream finance. And we'll really sit with the business owner to say, okay, you need help working on building out your financial statements or on doing market research or on some modeling, and then actually help come up with a plan so that there's that front end support when you walk in the door. And then, we really want to get you ready to take on that capital. And then the lenders continue to work with you over the life of the loan. And even if you get into, you have some issues and trouble with, making payments, there's usually going to be some options built in there as well for making some adjustments to really ensure that the loans don't go into default. And I think that's especially true for the loan fund model, which doesn't have some of the regulatory constraints that the community development banks and credit unions might have when it comes to things like delinquencies, charge-offs, and making adjustments to their loan products. Next slide, please. So as I mentioned before, loan funds have an ability to actually reach into markets a little bit deeper than some other types of lending institutions because of their structure and their capital sources. So I actually realized that there's an error in here because they're not actually more than half of certified CDFIs anymore. That has dropped to 42%. Because there's been a huge growth in the number of certified credit unions over the past year or two. So the first slide with the pie chart is the correct percentage of how CDFIs are structured. But I think what's most important here is that to understand that loan funds, and that's where OFN members are, 95% of our members are actually loan funds. They're able to do what they do through, like I said, their structure, but also their funding sources. So we're funded through a mix of public and private capital sources. We really aggregate capital from various different entities. So government sources, banks that have Community Reinvestment Act obligations, investors from foundations and philanthropy. Some CDFIs have actually been able to go directly to the capital markets and sell bonds and raise capital that way. And then some actually sell individual notes to investors. So you can actually buy a share of a couple of CDFIs that have that product. And of course, we also generate revenue from our lending and our programs, but the kind of high touch, deep technical assistance that CDFIs are known for providing can be pretty time consuming and expensive. And so a lot of loan funds actually still require some subsidy and some grants to be able to cover those costs. So for institutions like banks or others who are interested in helping and supporting these underserved markets, but don't really have the capacity or the infrastructure themselves to kind of go that extra mile, they invest in CDFIs, they partner with us, they invest in our capacity and our strategy. And then we're the ones that have the kind of on the ground community connections and relationships. We find the businesses and we figure out how to work with them. Next slide, please. So what are we actually doing in the small business space? So we have a pretty significant portfolio, about $25 billion in small business loans and microloans. So that's going to be, we consider that to be loans that are $250,000 or less, and the microloans are going to be $50,000 or less. And so we're actually, those numbers have been going up significantly over the past couple of years as well. And I think we'll continue to see a lot of growth in the small business space, especially for loan funds. So CDFIs, you probably may have initially started hearing about them during the early days of the pandemic with the Paycheck Protection Program, where we were really instrumental in delivering that capital to the most underserved small businesses who were locked out of that program from other mainstream financial institutions. So actually 3 of the top 10 lenders were CDFIs, but not only were they instrumental in PPP, CDFIs were also helping to administer state and local small business recovery programs as well. So I think there's a growing widespread recognition of the fact that reaching these markets requires some specialized skills and connections and some specialized knowledge as well, and that CDFIs are really adept at doing that. So we've been getting recognition from the public and private sectors over the past couple of years. OFN actually deployed about $180 million in a partnership with Google through our Grow with Google Fund. So we are a financial intermediary as well, and we actually were able to provide low-cost, long-term capital to our member CDFIs to support their short-term recovery and long-term financing needs of small businesses that they serve. So the money was deployed as capital loans and grants to CDFIs that are lending to minority and women-owned small businesses. And those CDFIs were then able to take our low-cost capital and then get that on their balance sheets and deploy it to their customers, their communities, and be able to actually reach a lot of businesses. And that's just one example of how corporate partners are really stepping into this space and trying to figure out how they can partner and work with CDFIs. There's a bunch of other examples. We have a finance justice fund at OFN that we're building too, which has a $100 million investment from Twitter. Other CDFIs have received investments from companies like Netflix and Lowe's, and Mackenzie Scott has actually made quite a few investments in CDFIs as well. So not just on the corporate side, I think, has there been a lot of new resources and attention, but also on the public side, there's been a lot of new public sector capital flowing through, especially money that's sort of dedicated to small business lending. So A couple examples of that are the $10 billion that was allocated through the American Rescue Plan for a new round of the State Small Business Credit Initiative. That's money that the states are going to have to work closely with lending partners to be able to actually deploy and to find the businesses to help them get that money out the door. And there's particular set asides for what Treasury calls small and economically disadvantaged institutions. So there's money dedicated to try to reach underserved communities. So we know that CDFIs are playing a big role in some states' programs to help deploy those funds. There's also been, significant new investment in CDFIs directly through grant programs. So we're expecting $1.75 billion in grants to come from the Department of Treasury for equitable recovery grants. This is kind of the last of some of the COVID relief money, and that's going to stimulate a lot of new lending as well. The Small Business Administration is also making some critical reforms to its government guaranteed program that's focused on underserved communities. That's the Community Advantage program. And some of those changes are also going to make it easier for CDFIs to access those guarantees, which then means, that's going to lower the cost of credit and capital for the small businesses that they work with. Next slide, please. So after hearing all of that and the understanding that there's a lot of money that is flowing through this industry, particularly that is focused on small business lending, maybe you're all wondering, how can we work with CDFIs and how can we use CDFIs to help meet the needs of our business? And I think there's a couple of ways. I think the first one is critically important, which is business development opportunities, right? There's all these various different programs, and CDFIs are going to need to deploy that capital. And so we're always looking for new business owners, new opportunities, new connections to, help provide that capital and that TA to, build their portfolios and get new loans on their books and to work with new businesses. So this is going to be an important way for you all perhaps to help build those connections between your franchisees and local CDFIs, and I'll give you some ways to do that on the next few slides. But you can also, if you're thinking about your organization's own capital and thinking about ways to deploy it to support diverse entrepreneurs, you could invest in or loan directly to a CDFI. So we're always also in need of low-cost capital to be able to serve all these wonderful businesses. So there is a potentially opportunities to invest in existing funds that CDFIs have that are dedicated to small business lending, to set up new funds that maybe you make a $5 million commitment to a CDFI to set up a small business fund to lend to Black franchise owners, and the CDFI would work its magic to deploy that capital. So there's always opportunities there if you wanted to actually become a financial investor in a CDFI. You can also help just by helping CDFIs build networks and enhance partnerships, right? This model really is community-based. And so making those connections between lenders, investors, franchisees, and others really makes those referrals and those partnerships kind of develop and flourish naturally. And then finally, since I lead our public policy work at OFN, I would never miss a chance to say, if you're so inclined, you can also advocate for CDFIs if you're doing any policy work and kind of spread the message of how these institutions are really working hard to help support the needs of our nation's small businesses. We'll always need more supporters and champions of our industry and our business model. Next slide, please. So if I've sold you enough on CDFIs, now you're probably wondering, okay, where can I find them? So there's a couple of ways. OFN has a tool on our website called the CDFI Locator. And on this, you can actually use different search filters to locate and learn more about OFN member CDFIs and where they're based on your geography and the type of lending. So what's great about this tool is that you can actually search for business lenders in certain states. So you can say, I want to find a small business lender in New Mexico, and a list of all CDFIs in OFN's network that are lending in that state will populate with contact information and links to websites and other information. So this is a great tool. It is limited to the 370 members in our network. So this isn't going to reflect all 1,400 CDFIs right now. And it won't have a lot of the CDFI banks and credit unions listed because our membership is primarily focused on loan funds. Next slide, please. We also have an online platform called CDFI Connect, which has about 10,000 active users. And this is where you can connect and chat with CDFIs and others. There's a specific small business finance community where lenders and others come together to, discuss issues or ask questions. So this would be a great place potentially to, start a discussion about which CDFIs are already active in lending to franchises or finding others that are considering entering the space and starting to make those connections. So this is really open to anyone. You can sign up, just by going to cdficonnect.org, and, you can have an account. And again, this is a great place to kind of start learning about who's really working in this space and talk directly to people that are also on this platform. Next slide. And then the U.S. Treasury Department keeps a website that has a list of all certified CDFIs. If you just want a list of addresses and and see which CDFIs are headquartered in your state, this is a great place to start. So it does have all 1,400, but I think the limitation of this data set is that it only tells you where the CDFIs are headquartered, but some CDFIs might lend statewide, regionally, or nationally. So this list won't reflect that. You have to do kind of a little bit more digging and find out exactly where each institution is lending, but it's a good place to start. And again, there's links to the websites for all of these institutions included within that spreadsheet. So some valuable information there too. Next slide. And then one really great way to connect with the CDFI industry is at the largest industry conference that's going to be hosted by OFN. It's our big annual conference. We expect about 1,500 practitioners, funders, investors, policymakers, and anyone else who wants to celebrate CDFIs to join us in October in New York City. So, this is a great way you can attend, as a sort of regular attendee or as an exhibitor or as a sponsor. There's lots of ways to get involved. This is also the first time we're going to be doing this conference in person since 2019. So this will be, a great opportunity and a big celebration. So if you go to OFN's website and go to sign up for our mailing list, you'll kind of get the latest information on conference registration and all of that. But again, just a great way to kind of learn more about the industry in, a 3.5-day conference in Midtown New York. So with that, just closing out with a picture of a business that was financed by one of our members. And, I'm going to turn it over to Anthony in a second, but just want to say, my contact information is on here, and I'm always happy to answer questions, help you navigate these resources, and connect you to some of our CDFIs that are, within our network. So with that, I'm going to turn it over to Anthony, who is actually from one of our members, AltCap.
Thank you, Dafina. I'll go ahead and get ready to share my screen as well. Let me know when you can see my screen.
We see it, Anthony.
All right, perfect. Let me get to where I can actually share it. There we go. Thank you, Dafina, for that. Great job. And I've seen a question come in that I think is relevant, but I'll start by saying this. You don't have to look for the CDFI locator. You've got one here. So you got one less that you got to look for. AltCap, market president for AltCap, as Jack said before. We're located in the Midwest, Kansas and Missouri, and we recently expanded into the Texas market, primarily in Houston to start. And we also expanded into the West Coast as well. So we've got a presence in the Los Angeles area. When we think about how we fund businesses, think about it from this perspective. There's a creative way that we can get business deals done from a CDFI perspective. And to be very candid with you, we, like Dafina said, we can function differently than a bank. We partner and collaborate with banks. But truth being told, and what I like to share with people is banks don't like to lend money below $200,000 because it's just not worth the paper that they're going to, and the time that they've got to put into that. So that makes it a great space for opportunity for CDFIs to come in and work with the community, work with the business owners, and even work with startups. And so I think one of the questions that I've seen come in is, can CDFIs loan to cover franchise fees? That answer is yes. And so, but we want to look at capital, not just to acquire to secure the franchising fee. We want to look at what takes place after you get the fee, and is there an opportunity to continue to partner and grow with that franchise opportunity. And so, who are we as AltCap? It's pretty simple. We want to be an ally to the community. And the pictures that you see are actual borrowers and people that we've worked with. We've worked with Martin Rucker to acquire trucks. And then we also help him grow beyond the contracts. I believe he went from 3 trucks to over 20 trucks in less than 2 years. So that speaks to the way that we can partner with businesses. He also participated in a program that we had called Next Stage KC, which we worked with businesses to position them to grow beyond just startups, to grow to $250,000 and $250,000 and above in revenue. So that speaks to the technical assistance that we do, and also capacity building. One of the things that we try to do, and let's be candid, there are a lot of outdated policies and systematic issues that limit access to capital. Let's be honest, we've seen that with the PPP funding. We've seen that when the banks closed their doors during the pandemic and leaving small businesses to scramble and figure out where they could go to capital. We've seen a lot of businesses go out throughout the Midwest out of business, which we don't want to see that, because that takes a piece of our economy away that's vibrant. It takes jobs away and it takes the tax base away. What we try to do at AltCap is we want to go after and invest in and partner with entrepreneurs of color, women entrepreneurs, and in underinvested neighborhoods. What does that mean? We go back to the banks, we go back to the cities, we go back to foundations and say, invest in us, because we want to drive programs, we want to drive impact as well, not just profitability. When you think about that, what it speaks to me and says is we're at the grassroots and we go into the hearts of the communities where other people want. When you think about IFA, I've seen in some of the research that I've done in preparation was you have over 14,000 brands. What that tells me is that you've had over 14,000 opportunities to open up your portfolio for our organization, for such as AltCap or other CDFIs to partner with them to say, hey, we are an option. And we're a viable option that not only will help you cover your initial franchising fees, but we can also provide additional services to that banks won't even provide. We won't look at just the balance sheet and the income statement. We'll look at the character, we'll look at the opportunity, and we'll look at the impact, which is distinctly different. We want to lend money basically to make change and strengthen communities. And we recognize that I'm at a conference that's called Heartland Summit today. A lot of people don't know, when you think about Walmart, you think about the Walton family, that started with a $20,000 loan. Think about that from a family member. So sometimes we need to think about as brands, and how do we get people involved and turn them in from prospects to applicants, is go where they are. Partner with a CDFI, partner with an organization that can make a life-changing investment, that can create jobs, that can create impact and grow beyond just the community, their local community. What has AltCap done? One of the things that we like to talk about, we're a 501c4, which means we're a business entity that leverages our tax-exempt status. I mean, we're not a bank as well, and we still have some of the same results. We've deployed $18 million. Our average loan amount is $25,000, so we can go a little bit lower. We went through new market tax credits. We do new market tax credit programs. We have a $55 million allocation 2 years ago. So that gives us a large range of motion to do not only economic development, but also participate in the economic development of a community, not just with the commercial real estate, but also placing businesses in those commercial real estate opportunities. We deploy 60% of our funding, which is a requirement for us to stay certified as a CDFI. But the amazing thing is, and this is where banks and other investors cannot believe, is out of that $18 million, we have a 4% loan default ratio. And those numbers are accurate as up into year to date. So when we think about that, there are a lot of businesses that went out of business, but they continue to pay their debt because they recognize that the relationship that we've established with them is that, hey, I may need to go back to AltCap because they provided a relationship and they provided capital when no one else would. And so those are things that we can do. We think about our terms at AltCap. We try not to go beyond 3 years, but we also understand if that business has some issues and challenges, we can extend that out to a fourth or fifth year if need be. We don't always look at credit score. We've done some loans and done some opportunities below with business owners that have below the 600 credit score, because there's a story. We look at the story, but also the character, and then we get to know our borrowers because they're in our communities. I would close it out and think about it. Here's what we really do: is we meet entrepreneurs where they are. I don't like the term innovative. I like grassroots lending, and we get creative on the back end of that. We've created loan programs for artists, which is rare because most people don't like to do the creative space or touching the creative space. We've done rehab loan programs. We've had some food truck programs for people that were looking to acquire food trucks, which is difficult for a bank to participate in. And we also did a couple gig economy. We tried to get into the gig economy and do financing for people that wanted to become Uber or Lyft drivers or Airbnb owners. So we can get really creative based on the need in the community. And if there's a critical mass, we can look to lend in that specific industry towards those specific entrepreneurs. There's my contact information to the brand owners on the call, and I'll turn it back over to you, Jack. What I say is, and I encourage you to do, is get back into the communities, talk to them about the opportunity and how successful you can be as franchise owners. My background for the last 7 years was working in a space where I turned companies around and made alternative investments into them. The biggest thing that I heard for the last 7 to 10 years, and even when I was with the National Minority Supplier Development Council, was equity investment, entrepreneurship. I seldom heard franchises. And one of the first businesses that I looked at when I was looking to transition from corporate America, I looked at franchises. I looked at Janet King, Janet Pro. I looked at Mathnasium. I looked at Snap Fitness because I was looking to see what can I take $50,000, invest $50,000 in and have the opportunity to own something. Now you think about a franchise, most entrepreneurs that we see every day, they've invested more than $50,000 into their business. And by the time they come to alt cap, they're looking for working capital, but they're tired of spending their own money. So we have to look beyond the balance sheet and the income statement and say, does this potential applicant have the wherewithal through the community? Because minority communities, they may not have a strong balance sheet or income statement, but they got some family members that'll come in and invest and work with them so they can be successful because they understand the importance of generational wealth or starting something. And so I'll be quiet. Thank you, Jack. Thank you, Dafina and IFA for allowing me to participate today. And I look forward to taking some questions.
Wow, that was wonderful. Thank you, Anthony. And thank you, Dafina. I just loved everything I heard. As a former chief development officer, I knew the hurdle for some actually was access to capital. And for some, we just weren't aware of this opportunity with the CDFIs, especially the under 2000 and how that fits in your space, the CDFI space. I love the phrases you use too, the grassroots lending, and we meet entrepreneurs where they are. All of that's excellent. Let's go over a couple questions. We do have a few questions, and the first one here we have is from Micah Logan from Meld Fitness. Do the recipients have to open businesses in underserved communities, or do they have to just be residing in underserved communities and want to start a business?
Absolutely. You nailed it. It doesn't have to be an underserved business. It just has to be in an area where we, as defined as, we want to target community. We get businesses that aren't in underserved areas, but they're going to go and serve an underserved market, because you think about an area such as large as Houston and LA, you can be in an affluent area and still be a diverse business owner going after a target audience. And so, yes, absolutely. It's not limited to that.
Great, thank you.
Dafina can add a little bit more to that as well.
Yeah, I would just add, I think Anthony mentioned that to be certified as a CDFI, 60% of your loans need to be in an underserved market that you've identified for, the CDFI fund, which does mean that, 40% doesn't necessarily have to be. Now, most CDFIs are doing more than that 60% threshold, but, the answer really is it kind of doesn't have to be either of those things, right? It just has to kind of fit into the CDFIs, kind of their lending plan, their target markets, and the types of businesses that they're looking to support. So, you don't have to be underserved necessarily yourself or open it in the underserved community. It just has to kind of fit in with the priorities of the individual institution. So it really does vary on a CDFI by CDFI basis.
Yeah.
Okay, excellent. And because we're talking franchising, right, we have a lot of franchise development folks on the line. What's the best way? Well, first of all, I love the CDFI Finder on the OFN website. That's awesome. But what's the best way for a franchisor to engage with you guys to see if their prospective franchisee is a good fit and so forth? Where would they start?
Dafina, you want to start and I can clean up?
No, I think since you're actually the lender, why don't you start?
So what we try to do is we want to sit down and really understand the business model. So we could sit down with the franchisor, understand the potential, because that person is coming in to look at acquiring a piece of their business. Beyond just looking at the viability of the potential franchise owner, we want to look at the business model and see what the projections will look like, but we also want to know the character of the person that's looking to acquire the loan. So the question for me is do they have a vision beyond the now? Because the excitement around starting a business, that can wear off a year, 2 years into it. And you're less inclined to walk away from it if you're connected to an entity as opposed to not. And so my conversation around with that would be, I'd like to look at the business model. I'd like to look at the revenue model, and I'd like to understand the character and the why of that potential franchise owner.
Excellent. Dafina, do you have anything to add to that?
I mean, I think he nailed it, right? And from OFN's perspective as a trade association, like I can certainly, we can help connect you to the CDFIs, but, they all have wonderful staff that are, going to be able to, they're going to take your calls, they're going to help answer your questions, right? I think that's the great thing about this industry is that people will try to find a way to help you, no matter what you come to, whatever questions you bring to the table. So, if it's connections you're looking for to institutions, that's definitely something OFN can help with.
Yeah.
Great.
And the other part, Jack, is coaching. A lot of CDFIs, we do coaching. We help them with the business plan. We help them put the revenue modeling together, and we help we could help the franchise owner or the business owner understand that they're making a good investment. I mean, we've advised some business owners to say, hey, you're credit worthy, but go find another opportunity. And I'll be candid. A few years ago, I remember saying to a person that wanted to start a restaurant, hey, if you're looking, you open up the yellow page and there's 50 restaurants in that domain or that area, go figure out how to become a distributor, because that may be a little bit more profitable. And that person went back and started looking and become the distributor of the product, and they were able to grow and build a marketplace that would have been that is a lot more profitable than going in trying to compete with 40 or 50 other businesses.
Yeah, that coaching piece is good too. And thanks for explaining, Anthony, the relationship you want to make. And as franchisors are used to that, they're used to getting to know the funding sources, whether they be banks or those who handle ROBs and so forth. They develop relationships so they know what to look for prospective funding partners. So that step of getting to know the CDFIs, so the CDFIs get to know them, is a key one. So thanks for bringing that up. We know how to do that. We do that already. We just need to do it with CDFIs and give us another arrow in our quiver when it comes to access to capital for our prospects.
Absolutely.
Here's another question. Typically, time is of the essence when a person's decided which franchisor they want to go with. So the question on here is, how long does it typically take to get funded if we have a candidate?
Ooh, that's going to depend on how quickly they can get our required documents in. I would like to say it could take, if we get the documents, we could probably turn the deal back around in 7 to 8 weeks. 7 to 8 days.
Oh.
But from beginning to end, the biggest piece of us looking at a loan or an applicant is getting the documents in. And we've got probably about a 10 to 12 step or 12 item checklist that they've got to get in. 2 years taxes. We want to make sure that they're a viable business. They've got their registration set up for whatever state that they need. They've got the required licenses. We'll need to look at profit and loss income statements and things of that nature. And if it's a business under a year or 2 years, we may look at a business plan. And so there's a couple different ways that we can help them to get to where they need to go.
Okay, great. Thank you. Let me see what other questions we have. Here's one. Can a CDFI work anywhere? For example, if someone from the East Coast reached out to you, Anthony, and their prospect is on the East Coast, could your CDFI work with them, or do you guys have regions or areas that you stay within?
So we have regions and areas that we stay in. AltCap right now is set up to do Missouri, Kansas, Texas, as well as Los Angeles. So we have very targeted markets. Me, because of my experience, if someone reached out to me from another area, if I knew of a reputable resource that I could connect them with, I would absolutely do that. And I would recommend that they do that just to build that regional support base. Because one of the things that Dafina said, but I don't think she brought it home well enough, is CDFIs are well connected in their communities. AltCap, we partner with the Women's Business Centers. We partner with a host of the Kaufman Foundation. We partner with a lot of different resources that we can connect people to. So that's the other benefit beyond just funding. But I think Dafina mentioned it. I didn't want someone to gloss over it. But so yes, the regionality it matters.
Great. And I guess we can find that, Dafina, on the OFN locator, right?
Yeah, and I think the a little bit of the challenge of trying to sort through all of this is that it's not always readily apparent what the kind of geographic service area is of the CDFI. So I think, as I mentioned earlier, some are hyper local. They might only work in a couple of neighborhoods in a community, but some are regional and some are national. And so you do kind of have to do a little bit of digging, to see, the larger ones are probably going to be serving more areas and more states than some of the smaller ones, right? But that's another place where, it's probably worth just reaching out to, an OFN where, we can say, okay, if you're in New York, we can give you a list of small business lenders that are working in New York, and try to kind of narrow that down a little bit.
Gotcha. Thank you very much. Here's another question.
I can give you a relevant example too, Jack.
Okay.
So we work with an institute that's based in Atlanta. They're looking to grow into the Texas market and probably the Kansas City market. They reach out, do all the packaging of the information business plan, and they call us and say, hey, we've got a candidate in the Texas region. Would you talk to them about funding and taking a look at their loan application, providing resource information and insight? We'll work in that capacity because even though they're headquartered or based in a different state, they're looking to come into a market that we're in. We'd be happy to work in that capacity.
Thanks for that example, Anthony. That's great. We have another question from our audience from, I believe it's Galen Barrett. Are there restrictions on business type, asset type, use of proceeds, or any other feature of a project or capital need?
Dafina had a slide a little bit about that. You want to dive a little bit deeper into that?
Yeah, I mean, it really is going to depend on the individual institution, right? Like every CDFI has its sectors that is focused on serving. Some are exclusively going to be working in, the micro enterprise space and focusing on startups. And some are going to be able to, provide those larger loans or work in different areas. So it really does depend on the organization and what their business model is, what types of funds and structures they have set up. It's sort of hard to, and sometimes it's also related to the program they might be using to fund your loan, right? So if you're trying to use the SBA 7A program, well then yeah, they do have some restrictions on that, loan loss reserve or other types of programs. So it really is going to have to be a conversation with the institutions to see where that fit might be for what you're looking for.
And typically a CDFI will follow similar like SBA guidelines on here's the type of businesses that we lend to, here's the type of business that we don't. I'll tell you very, very candidly, we try to stay away from sin businesses. When the cannabis business industry started taking off, you had some CDFIs that were looking and seeing how they could lend into that space because we knew that very few banks outside the Colorado region would even lend into that space. So we were looking to say, is this something that we could lend to if we had some targeted or program related investments or investors in that space? So
Great. That's awesome. I think that exhausts the questions that our audience has right now, although that was a lot to digest. It was a lot of new information for a lot of us. And I think a lot of us are excited about this being another, as we mentioned, arrow in our quiver to help overcome that access to capital piece. And remember, as mentioned earlier, this webinar is being recorded. It's going to be distributed along with the slide presentations from Anthony and Defina. So that looks like all we have. But before we go, Ricky, any closing words from you?
Thank you, Jack. First, I just want to give my thanks to the three of you, Defina, Anthony, Jack, for bringing your expertise to this conversation so that we can really keep this conversation moving with our members. It is 100% the most common question that I get, which is how much more can we do, or what does it look like to help increase our ownership opportunities for underserved communities. And when I think about the information that is shared here and how that's the #1 hurdle, I really hope that we have inspired people to share this information within their franchise development teams and to look at ways that they might be able to lean in. So I mostly just want to say thank you at this particular point. And we can, and you had already shared that we are going to record this and we can distribute it and share it as well. So, Jack, thank you. And I hope we're going to have another conversation where we can keep diving into this moving forward. So thank you for joining us today.
Thank you, Ricky. Thank you.
Thank you.
Thank you, Anthony. Thank all of our guests and audience. Have a great day.
You
Thank
too.
you all.
Bye, everybody.